10 years ago, I made my first investment in the stock market. If I could go back and tell my younger self just 5 things, I would have saved thousands of dollars and years of stress. Today, I'm breaking down exactly what those 5 things are. Quick note before we dive in. I'm sharing my personal experience from over a decade of investing in stocks and crypto. This is educational content, not financial advice. I'm not a licensed financial advisor, and everyone's situation is different. Always do your own research and consult with qualified professionals before making any investment decisions. Now, let's get into it. Welcome to the Investing Whiteboard. I'm here to break down investing concepts simply, using real experience from the trenches. These 5 lessons cost me real money to learn, but they transformed how I invest. Whether you're just starting out or you've been at it for a while, at least one of these will change how you think about your portfolio. Lesson number 1. Time in the market beats timing the market. When I started, I thought I was smart enough to buy low and sell high consistently. I'd sell when things looked scary, wait for the perfect moment to buy back in, and guess what? I missed some of the biggest up days. Here's what the data shows. Missing just the 10 best market days over a decade can cut your returns in half. The problem? Those best days often come right after the worst days. When I started staying invested through the volatility instead of trying to be clever, my returns improved dramatically. Your money needs time to compound. That's the real secret. Not perfect timing, but consistent time. Lesson 2. Diversification isn't boring, it's survival. In my first few years, I'd go all in on stocks I was sure about. Tesla, some random tech company my friend recommended, a crypto that was definitely gonna moon. Sometimes I was right, but when I was wrong, it hurt bad. Here's what I learned. Diversification isn't about making less money. It's about staying in the game long enough to actually build wealth. Spread across different sectors, different asset classes, even different countries. Now, I don't put more than 5 to 10% of my portfolio in any single position, no matter how convinced I am. One company can go to zero. A diversified portfolio, it's much harder to destroy. Lesson 3. Your emotions will cost you more than any market crash. This one is personal. In 2018, when crypto crashed 80%, I panic sold near the bottom. Why? Because watching my portfolio drop every single day was terrifying. 2 years later, those same assets were worth 3 times what I sold them for. That lesson cost me 5 figures. The market is designed to trigger your emotions. It feels amazing to buy when everything's going up. That's greed. It feels terrible to hold when everything's crashing. That's fear. And both of those feelings will make you do the wrong thing. Now I have rules, written rules. When do I buy? When do I sell? What's my exit strategy before I enter? I decide these things when I'm calm, not when the market's freaking out. Remove emotion, follow the system. That's how you win. Lesson 4. Fees and taxes are silent killers. When I started, I didn't pay attention to expense ratios, trading fees, or tax implications. A 1% management fee sounds tiny, right? Wrong. Over 30 years, that 1% fee can cost you hundreds of thousands of dollars in compound growth. Every trade has a cost. Every dividend has a tax implication. Every fund has an expense ratio. I learned to ask, what's the total cost of this investment? Use low-cost index funds when possible. Hold investments longer than a year for better tax treatment. Trade less frequently. These small things add up to massive differences over time. Lesson 5. Continuous learning is non-negotiable. When I started, I thought I could just pick stocks based on gut feeling or what was trending on social media. I was competing against people who did this professionally, with teams of analysts and billions of dollars. That's not a fair fight. So I started learning how to read financial statements, what actually drives stock prices, how different economic conditions affect different assets, understanding market cycles, behavioral finance. The more I learned, the better my decisions became, not because I could predict the future, but because I understood what I was actually buying and why. You don't need to be the smartest person in the market. You just need to be educated enough to not make dumb mistakes. Read earnings reports, understand the businesses you invest in, learn from people who've done it successfully for decades. Knowledge compounds just like money. So, there you have it. 5 lessons that took me 10 years and real money to learn. Time in the market beats timing the market. Diversify like your future depends on it. Control your emotions with systems. Minimize fees and taxes, and never stop learning. These aren't sexy, they won't make you rich overnight, but they'll help you actually build wealth over time instead of gambling it away. If you found this valuable, subscribe to the Investing Whiteboard. I'm breaking down real investing lessons every week. No hype, just education from someone who's been through the cycles. Drop a comment and tell me which of these 5 lessons resonates most with you, or what's a lesson you learned the hard way. Thanks for watching, and I'll see you in the next one.